This is going to be episode 2, which is trading with the trend. This is going to be an in-depth, more of a kind of confluence with the episode 1. These are going to be the only two videos for the most part. They're kind of going to go hand in hand for the most part, I think, back to back. For the rest of them, I'm just going to drop them randomly, like in any randomized order. But for these two videos, they're going to be more of like a kind of like A and B type of video. More in depth on the first video, which would be the Fibonacci. If you haven't checked out that video, go check it out. This is going to be with the trend, which is going to help you with getting risk rewards, because you're not going to be able to use the Fibonacci if you don't understand trend. If you're not being very important with understanding the way the market moves. If you're not understanding the way the market moves and understanding trends and looking for risk rewards, you're going to find yourself losing and having a terrible time in this market. So what you can do is, as well, if you haven't and you're having trouble understanding trend and market, is just change the colors all to black. Like literally, if you just change them all to black, right, that's going to keep things simple. So you're not looking at this as, oh, I see a bunch of orange candles, I see a bunch of blue candles, let me just keep buying the market all the way up. This kind of gives you one solid color, and then you can clearly see, okay, like market structure. You can go in the higher time frames and kind of get a actual bigger picture of what's happening, right? Like for example here, I'm going to remove everything and I'm going to explain why trading with the trend is amazing for understanding how to take trades on the minor time frame. If you know that, okay, my session, for example, this day is giving me a pullback trade, which means that the market is not trading with the overall trend. If I know that the market is not trading with the overall trend, I'm still possibly looking for a setup, but I know that this is not a setup I can hold to the next trend, or to the next session per se. Like I know that most likely the New York is going to be a reversal. So if I'm trading GBP USD or GBP JPY, let's say that if I go and add, let's say, sessions, right? Perfect example. So I know that the market's in an overall downtrend, but I see that the market is pushing up for my session, right? So if I'm trading London session, I see that as soon as the market opened up, the market was pretty much pushing up and giving me buys. So I know that, okay, there's a potential setup for me to take here, but I know that this is going to be a short-term bias, and this is not a trade that I'll be holding for long. So if I were to drop down on a 5-minute time frame, and I'm going to change my colors back to OB, which is the orange and black, because I just don't like using solid colors anymore. I did at one point, but just not anymore, right? And if I actually add RSI, and I haven't posted a video on RSI, but I'm going to explain it after. So I'm going to break down a trade that you could have took if you were trading London session and you were taking a counter trend trade. This is more an advanced trade, but this is something that you can take. I mean, you know. So as you can see here, you see multiple forms of confluences that the price wants to pull back, right? Just short term, the market wants to pull back to create an entry. So if you understand that the market's in a downtrend, but the market right here is telling you that the market, people who are selling are actually taking profit, that's what the RSI is telling you, divergence. You have this low and you have the market pulling back up. So if you mark up from here, you have a higher low, right? You have a low and a higher low, and you have a low and a lower low, right? So you see that the market is actually creating lower lows, but you see the RSI creating higher highs. So that's telling you that this is a certain area where you can look for actually divergence and look for actually retracement or reversal point, right? And what you can do is even drop down on a lower time frame and wait for structure to be broken. And you didn't necessarily have to enter right at these points. You could have entered right here, wait for the market pull up, or what you could have done is just wait for structure to be broken, which you can kind of see right here. Price pulls up, pulls back down, gives you an entry. I believe that's like a 50% retracement entry, and the market gives you an entry right there. There's a fib move, and you're pretty much just targeting previous structure right here, the closest previous structure higher at this point. You can either target just right here for 1 or 2 risk reward. This is 13 pips. And you have a 6 pip stop loss, 1 to 2.24 risk reward, or you can target this previous structure high at this point right here, and this gives you 1 to 3. This is a very advanced trade that a lot of people won't necessarily be able to take, but if you're able to spot counter trend trades and counter trend moves, you can always make money in the market no matter what your session is doing, because you understand market flow. If you understand market flow or market structure, this is the reason why it's so important. If you understand trend, you understand how to trade with the trend or against the trend. You just know how to trade in a sense. You know what I'm saying? That way, there's more setups you can take. There's more money you can make. You're not, stuck to only trading a certain market. You have free roam. You don't have to be sitting here and like, oh, there's the market's pulling back, I can't take a trade or this and that. Yes, you can if you understand market structure. If you understand that you can actually take a trade, it's a more trade that's requires more skill, but there's this trade there for you could actually take. And these are trades that I don't necessarily take per se too often, but if I feel like it and I feel like there's something there for me, I'll take it. But these are trades that they're higher risk in actually trading with the trend, right? And instead of taking this type of trade, a lot of times I'll wait, 3 or 4 hours and just take the actual overall trade with the actual move. And I'm going to break down something and show you how, if you understand trend and you know how to use Fibonacci and everything, you can really just capitalize and get massive rewards that you wouldn't normally be able to do. And if you have confidence in your trading and you have the skill set, it's all you need, man. If you have the psychology, the confidence, the risk management, everything, you're going to have the whole total package, right? So we know off top that the market is pushing down, right? The market has showed you that the market is changing from an uptrend to a downtrend. And if you guys don't see that, I'll break it down right now. As you can see here, if you go on the line chart, which is more clear, you can see the market is creating a lower low. In an uptrend, it broke structure. If price wanted to continue to go up, it would have never created a lower low. There's no point for the market to create a lower low and then create a higher high. Like, it just doesn't make any sense. It can happen, but it's not likely to happen. So when you see the market pull back up, you know that that's most likely a high probability that the market is doing that just to give you a retracement, to give you a better entry. Let's say cheaper, higher price, better, like whatever you want to look at it, wherever you need to understand it. Create your own ideal of what the market is trying to do. It's giving me a cheaper price, whatever you want to do, better entry, right? The market is just pulling back. It's giving you a retracement, right? And what I do is this. What I normally used to do is just sell it as soon as price do that. But what you notice is you get a lot of drawdown, right? This is the reason why patience is so important. So if you were patient and you really waited for candlestick confirmation and you waited for structure to be broken, right? And this is the reason why structure is repeating itself, right? Over and over and over again. You could be in a downtrend, and while you're in a downtrend, the market is in a minor time frame uptrend. And before you can get in for a high risk reward for the downtrend, you have to wait for the minor time frame uptrend to be broken. And this is what happened here. The minor time frame structure was broken, so when the market pulled back down and pulled back up, you know that this is a full game for you to sell the market in confidence and know that this high should get respected, and a lot of times it will. Sometimes it doesn't, but a lot of times it will, right? Trading is a game of probability, so this is the reason why it's so important to have risk management. That video is going to be coming out as well. And as you can see here, price gives you an entry. I mean, honestly, this even looks like an evening star, to be honest with you. The market gives you an evening star on the 5-minute time frame, and you can literally just sell the market right after that. You see that it's in your sell zone. This is my golden zone right here. This whole zone right here, I'm paying attention to this zone. I'm really paying attention to this zone. I want to see what price is doing. And as you can see here, price gave you that sell entry point to tell you that the market is done doing its minor time frame pullback again. The market just keeps doing these minor time frame and higher time frame moves. That's all it's doing. So if you understand the flow of the market, you can just kind of see what it's doing. It just repeats it on the higher time frames, on the lower time frames. It's all the same thing. You can wait for price to give you that type of entry. Have a tighter stop. Why? Because you're entering on a candlestick confirmation, right? That's in confluence with the higher time frames. That's in your sell zone. That's after structure is being broken, which is giving you all the confluence that this stop loss could actually play out in your favor, right? So you have all these different confluences. I mean, like, it's endless. And this is just off of market structure. This is not using SMAs. This is not using RSI. This is all just market structure and just understanding that, right? And you're using that entry right here. You can have an even tighter stop loss like that. Enter right after that candle close. You have an 8 pip stop loss right here. And then you're targeting all the way down here. You're clearing all these lows. Why? Because you know that the market is an overall downtrend. So you can just hold the market down. Look what you would have had. You would have risked 8 pips to catch 177 pips. This is the stuff you can kind of do when you really know what price is trying to do. If you understand the way the trend is moving, you can get massive risk rewards. This is the difference between failing your FTMO account, failing your MyForex Fund account, blowing accounts because you're trying to buy and sell in this market. You see the market going up, you're buying the market. When you see the market going down, you're selling the market, you know, versus understanding market structure. If you understand market structure, you can kind of catch bigger risk rewards, bigger moves. You can use tools better, you know, Fibonacci, extensions. You can use all these tools way better because market structure is a foundation. You build a house on the foundation. You just don't start boarding up houses and start picking up wood and just start building a house out of thin air. You need a foundation. Market structure is your foundation, right? So as you can see, these are the type of moves you can catch. People catch these moves all the time. You know what I'm saying? And I've done them all the time. You know, I don't necessarily hold trades anymore because I like to trade just in my session. I like this, whatever my session gives me, I'm taking and I'm gone. I don't want to be sitting here looking at my phone all day. You know, I don't like dealing with it. Some people do, but it's a lot of emotions that you gotta have to be able to control when you see that you're up, let's say 1-6, and then the market goes all the way back to you being up 1-2, and then you gotta continue to keep holding. Why? Because you gotta have the confidence. You gotta know, you know, you already know the market's going down. If you wouldn't sell it, why close it? You know what I'm saying? I mean, if you wouldn't buy it, why close it? If you're gonna sell, and this is not like, you know, a lot of times when I was beginning, I'll see, okay, market's all the way up here, I'm gonna take the profit. But this is the perfect zone for another entry, right? Instead of me looking at this as just for the money and just looking, oh, the market pulled back. No, look what price you're trying to do. Break and retest. Market structure is simple. The market is going to create lower lows and lower highs. You got to be patient and you got to be able to hold through all that stuff. If you want to catch these big moves, you got to be patient. You got to be able to wait. If you want those 1-17s, it's not just going to be all black big candles. It's going to be pulls back. There's going to be retracements. There may be long retracements that may happen for the whole day. But if you're willing to wait, then you might be willing to get paid as well. So, you know, it is important, very important to understand market flow and the way the market is trying to move, right? And I hope I explained everything in this video. This video is not really going to be long. I just want to explain trading with the trend and why it's so important. Why it's under, you know, you want to know where the market's trying to do. It's very simple. It's caveman simple. Like, if you see that the market is creating lower lows and lower highs, then you know that that's what the overall market is doing. So when you see that, okay, I know that the market is in an overall downtrend, but we're in a current uptrend right now. So let's say you're looking at the market, you add the sessions, and you see, okay, I know that the market is an overall downtrend, but let's say for the last, 18 hours, the market has been pulling up. So how am I going to get a good risk reward? How am I going to get a good trade? Well, this is exactly how I would do it. I would wait for price to actually break structure in the amount of time frames. Then I would pull my fib out, and then I would mark it up from the previous high, the overall structure high at that point, to the new low. Structure is broken. This candle changed the whole trend and gave you a clear signal that the market wants to continue to go down now. It doesn't mean that the market is going to continue to drop. It's telling you that once this breaks and clears this is over with. Now you can start to look for entries without the market just keep going up. Now this is telling you this broke. This is the candle that broke structure. So when the market pulled back, that gave me all the information I needed to just sell the market. I'm not even waiting for candlestick confirmations in here. I could do that as another form of confluence. But for me, a lot of times it's not necessary. Like, if you understand where everything's going or everything's going on, I don't need to wait for every single confirmation to take the trade. I'm taking the sell right there. As soon as price gives me a good entry, good risk reward, I'm selling it. And I don't necessarily have to close out at my 61.8. I need to be prepared for deeper retracements. The market could have easily come to that point and gave you this type of move once it hit the 61.8, the negative extension. And I need to be aware and ready for this type of situation that can happen to price at that point. But if I'm willing to hold and I want to eat and I want to get a good big trade, I need to be able to have patience. And if I don't, and if this is a day where I got stuff to do, maybe I got to work out, maybe I got to pick up the kid or whatever, then this is a day where I need to just get in, get my 46 pips, and get out the market. Even though we're in a downtrend, take your money. I just called a 1-3. Maybe you're risking $500 on a 50K account, risking 1%. This is a $1,500 trade. You're done. You come back tomorrow. You see, okay, it's tomorrow. The market is in a downtrend again. Okay, bet. When the market is pulling back, this is a very exhausted, the market's very exhausted now, so I need to be careful. The market can give me retracements, so what I'm going to be doing is I'm gonna be paying very attention. You know what I'm saying? Maybe if you weren't always using your RSI, maybe you add the RSI and see what the market's trying to do. Drop down in our lower time frames and see if you see any divergence. Guess what? We see divergence. We see that the market created a very extended, you know what I'm saying, hitting the 20, I believe. This is hitting the 18 on the RSI. So this is telling you, okay, the market is really ready to actually probably pull back now, right? People are taking profit. People are closing out. So I know that, okay, if I take this trade, I know that the most likely I need to make it quick. Get in, get out. Maybe if it hits my first take profit, I call it a day. That's exactly what happens. Price does that, hits your first take profit and pulls back. You're out the trade. You know what I'm saying? You made $750 risking 500. You're out the trade. And what you see here, you see divergence. You see that price create a low and a higher low, right? So if you want to highlight this, what do you see? We see divergence, so we know that this is a possibility that the market could be giving reversal. What happened after that? Once structure broke, right? And this is where structure broke, right at this level. As soon as this candle pushed up and pushed back down, that's my buy. Why would I buy right here? Because I have divergence and I have structure being broken. That's more than enough information for me to take this buy. Short-term buy, because as you can see, we're in a deep sell. But that's still pips. That's still money. I can take the entry right here, right at 9 o'clock, buy this market back up, sell right in this supply zone, and get right back out the market, cash my 36 pips, and get out the market and be done. Have my stop loss like right here, you know what I'm saying, and cash me a 1 to 3. Someone will look at that trade like there's no trade. There is a trade. If you know how to trade, there's always a trade. So hopefully you guys enjoyed the video on trading with the trend. And I'm going to make another video. I don't know which video is going to be, but stay tuned. I'm just going to keep dropping them after making them.